Hello and welcome to the Divorce to Bliss podcast. Here you will learn all things related to healing from divorce, mind, body, and spirit, so you can create a beautiful new life filled with happiness. I'm Rachel Ruby, author of Divorce to Bliss, divorce coach, speaker, and attorney, and I'm so glad you found me here. Hello and welcome to the Divorce to Bliss podcast. Today we are going to be talking about steps to take when you are divorcing from a tax and financial perspective. And my guest today is Rachel Ivanovitch. She is the founder and chief leadership officer of Easy Life Management Incorporated, which is a tax advisory practice and business consulting firm. Rachel loves to help entrepreneurs to develop their visions, grow their businesses, and live to their fullest potential. And she also has a passion for helping young adults to learn to grow their businesses and teaches financial literacy and other life skills through a variety of programs. So welcome, Rachel, to the podcast. I'm so happy to have you here.
Thanks for having it. It's so weird. Hello, Rachel. How are you?
Hello, Rachel. the two Rachels.
Yes.
Yeah. Thanks for joining. Yes. Yeah, thanks for joining me
today.
Yeah, I'm really happy to have you here today. And I think it's fair to say that when people are going through divorce, oftentimes, there's so much involved. There's so many things you have to remember and you have to do. And then you throw in the whole emotional part of it that sometimes things might get, left by the wayside. And I feel from talking to people that the financial aspect, the tax aspect is usually one of those things. Would you agree with that?
It really is, because taxes and money in particular makes people very emotional. And, there are a lot of decisions that people, they really don't know what to do. And some of the things they don't even think about doing. And so I get a lot of people calling my office while they're going through a divorce, especially women in particular, because oftentimes the partner was the one doing the taxes. And so they call me, and this is maybe the first time they're doing taxes. So it's scary. It's emotional already. They're feeling very vulnerable. So, calling and trying to get that advice they really need an advocate. So when you're going through a divorce, that's, I think, one of my biggest things is find yourself an advocate that can help you understand your taxes, that can explain it to you, and so that you understand. Clearly, you don't want to necessarily be doing your own tax return unless that's what you're educated to do. But finding someone who will hold your hand and walk the walk with you, walk through it and explain things so that you feel empowered, I think is really important.
Yeah, that's exactly right. And the interesting thing, and I've said this before when I've spoken with other financial people, is that this is something that is completely within your control. Whereas when you're going through a divorce, it sometimes feels like there are so many things that are not within your control, especially if you're going through a litigious divorce. So it's really nice to know that you can control something and something that's so important. So let's jump in. We have a couple of main questions with a lot of subparts. And the first one is, what are things that people can be mindful of when divorcing, when it comes to taxes and financial aspect?
So this is a very broad subject. So I will address this as I would if you were a client calling my office. And so you're going through divorce. Right. And typically the first thing I want to talk about is filing status, because filing status is, do I file with my spouse? Because until the moment you're divorced, you're considered married. And when you're married, you truly only have three options. If you have children, if you do not have children that live with you, you only have two options for filing. So the first option is you file together. And if you do decide to go down, and I'm going to talk about pros and cons of all of the different options. You can file together, which is married filing jointly. You can file separately, which is married filing separately, or you can file head of household if you have a qualifying child. So those are basically your three options. Okay. So there are pros and cons of each. One of the things that I would caution and advise you if you are working with a tax professional already is And oftentimes the case is one of the spouses has a closer relationship with the advisor than the other. So you want to make sure that if you continue to work with the advisor that you've been working with for many years, that they sign a conflict of interest statement, because clearly you want to make sure that your interest is represented in a fair and equitable manner. So maybe you want to go find your own advisor when you're going through a divorce. So let's jump back to filing status and what they mean. So if you file jointly, if you're putting yourself on the hook for the taxes for that tax return that you filed. If down the road, God forbid, the tax return gets audited, and then all of a sudden you're back together with that spouse that you've already divorced, and you're, back in the thick of it again. So that's one of the considerations. If you do file jointly, maybe you are kind of getting along still, and you're like, you know what, let's just file together. It's the final year. Let's just get it over with. It's just easier to file together. That's how we've always done it. Might not be the best decision because it's called joint and several liability. So that means, like I just said, if down the road, all of a sudden the return gets audited, you are on the hook for all the taxes if your spouse does not pay those.
That is really important to know. So that's good. A lot of people
be blindsided by that.
Yeah.
The other issue with filing jointly is if you owe for the current year, if your spouse decides not to pay, again, joint and several liability, meaning you're on the hook for all of those taxes. So you really want to be sure. I mean, if there's a refund, clearly you have to decide who's getting the refund. How do we split it? And then that often causes fights or you didn't have enough withholding, and the other person then says, well, I paid in all the money, so I should get all the refund. So it does cause additional tension and or arguments that you could potentially avoid if you do decide to choose one of the other filing statuses.
Yeah.
So benefits of filing together, maybe you've always filed together. If you live in California, one of the community property states, you don't have to separate and allocate income between spouses. So that's a consideration if you decide to not file jointly. So if you file jointly, all the income, all the deductions go on one return. It's just same as you probably always filed if you live in a community property state. You file, but then there's those drawbacks.
Yeah. Okay. People often ask me, at what point am I considered, we separated, let's say mid-July, what filing status? We didn't live together, and sorry, you were still at 12/31, December 31st at midnight, you are still married. Not that divorce is not final. You're considered married for the entire year. If on December 31st, midnight, your divorce goes through, it probably won't be midnight, but if it does, then you're considered single all year. So that's kind of that. Once that divorce is final, that's when you can actually make that decision. Okay, I can file single now. The other two filing statuses. So you've got married filing separate, which in community property states can be a challenge because you do have to take that community income. So if you are living in the same household and you're both working, you have to take half of the husband's paycheck or self-employment income, retirement income, whatever income belongs to the husband, and half of that goes on the wife's return and vice versa. So until the date of legal separation, you legally have to, for tax purposes in a community property state, you take half of the community, what goes on one, and half the, so it's messy. But unfortunately, that's the way the law is written. And married filing separately is not the best filing status because there are many credits that are eliminated and disallowed if you agree to file separately, which is why a lot of people will file jointly. Right.
Yeah. And they will have it written into the divorce decree. We will file jointly. This is how much refund, or, we're both equally liable for 50-50 of the taxes, or the wife will pay the taxes or the husband will pay the taxes, but they actually get it in writing so that it is everybody's clear, the expectation is set, and you don't later have to come back to it and make that decision. And you basically take the emotion out of it. Let's just make a business decision. This is the legal decision. This is the way we're going to file.
Yeah.
So your third option. So I did allude to 3 options. So if you are still married, but you do not live with your spouse for the last 6 months of the year, and you have a qualifying child or qualifying relative, you can be considered unmarried for tax purposes. So that's our third filing option. So that's head of household. And once you're divorced legally, you can still file head household if you have a qualifying child or a qualifying relative. I love the head of household filing status. It's a great filing status. So if you are going to separate, try to separate by July 1st so that you truly can, if you have children, you can make that that decision to file as head of household.
Right. This is really, this is a lot of, again,
a lot of information.
It's a lot of information. And I have a great accountant, but when I was going through divorce, it just kind of, I think we did file jointly because we split, we filed for divorce at the beginning of January. Right. And so, yeah, but still there were a lot of headaches, like refunds and things like that. So this is great advice. Yeah.
So the second thing that clients ask, or potential clients ask when they call our office, is about dependency. And this is something that really needs to be, you need to be aware of the pitfalls here. And when you're executing and drafting your divorce decree, you want to make sure that that you consider several things, because you're already emotional when you're getting divorced. You're not maybe thinking straight. Maybe you're fighting, and you're taking care of kids. And it's like the last thing you're thinking about is who's going to claim the kids on the taxes. And so this is really important to get written into your divorce decree about dependency, because this will determine who can take various credits, such as the child and dependent care credit. So if you're paying for childcare, you want to make sure that you're able to get credit for that childcare because it's expensive. And so you want to make sure that you're not paying more tax than you have to. Maybe your employer offers a dependent care plan. So you want to make sure that it's written in the divorce decree who is eligible for this dependency. The other credit that is the child tax credit. It's currently $2,000. It's a dollar for dollar reduction of your tax. So you're eligible for this until your children are age 17. So you want to make sure that you are writing this into your divorce decree, that you know that you are eligible to claim your children. Maybe you have 2, maybe you have 3 children. Maybe you want to decide one spouse you take one, the other spouse gets the other, then you each can file a head of household if you're each paying the more than half the cost of the upkeep of your home. So there are ways to structure it that, maybe, you want to be fair. Maybe you want to help your former spouse with, with their taxes as well. Maybe it's not maybe you just decided, maybe we're not a good fit. So I know there are a lot of messy divorces out there. I had one myself. But I do think that it's really important to get that written into your divorce decree, that who is, and be very clear, because this, again, later you don't want to go, well, I thought I was claiming the kids. No, well, I thought I was claiming the kids. So making sure that you're actually getting that in writing is really, really essential. The other thing that I see that often, especially women, don't consider when they're going through divorce and getting their divorce decree drafted is medical insurance. Who's paying for it? Who's paying for the kids? And making sure that that is in writing. And that isn't necessarily a tax issue, but it is definitely a financial issue. And it's something that I thankfully thought about in addition to child support, I requested that my former spouse, their dad, pay for my children's medical insurance through age, of majority. So I think that's really, really key, and it's something you might not even think about, but health insurance is expensive. And there's a tax penalty in the state of California if you don't have insurance. So just making sure that that's a topic that gets covered in your divorce decree, I think, is really important. The other thing that oftentimes doesn't get written in there is who's going to pay for college. And And that's not even discussed. Maybe you have really small children when you're getting divorced. And so also, again, this also ties in with dependency, because there is what's called the American Opportunity Tax Credit. So maybe your children are going into college as you're getting divorced, and you want to make sure that you get all the tax benefits you can for the tuition that you may or may not be paying. But that credit goes hand in hand with dependency. So you want to make sure, again, that it's very clear and the intention's already set from the get-go, so that you know that everyone is clear on who's going to be claiming this credit. Because the American Opportunity Tax Credit, it's a dollar for dollar reduction of tax. Again, it's $2,500. And that's huge.
Yeah.
It doesn't pay for even a semester of college, but maybe it'll pay for, some transportation, some books, some of the meal plan, and et cetera. So yeah. I think it's a very important thing to be thinking about when you're going through a divorce. And again, it's maybe not something that's top of mind, because there's so much that's going on in your life that, that's kind of the last thing that you're maybe thinking about.
Right.
Yeah.
Okay.
Something else that is really important to think about when you're drafting, and again, is, should I ask for child support, or should I ask for spousal support, family support, otherwise known as alimony? And so the rules around spousal support changed under the Tax Cuts and Jobs Act. That was back in 2018. So pre-TCJA, or Tax Cuts and Jobs Act, spousal support was income for the recipient. And whoever paid that spousal support or alimony had the option to deduct that from their income. Under the new rules, they don't get to deduct it anymore. And so I personally believe it's hurt the recipient of the spousal support, typically the wife, because the husband doesn't want to pay as much, because they're saying, well, I can't deduct that anymore, so why should I pay so much? So this law is set to sunset at the end of 2025. So we only have 2 more years. If you have a divorce decree that was pre-Tax Cuts and Jobs Act, if you go back to modify your agreement, make sure you do not reference the new rules in the agreement. Make sure that because you are grandfathered in under the old rules. Okay. So that's something that oftentimes will happen, is that the wife will say, down the road, my kids are getting more expensive, and, there's inflation, things cost more, I need more money, and they go back to court. They don't know that the change in these rules, and all of a sudden they're hit with this, this new rule. Yeah. So keep in mind, child support is never taxable, or as long as I've been doing taxes, has never been taxable. Hopefully it never will be. So when you're negotiating support, those are 2 things to kind of keep in mind.
Okay. Great tips.
So I know that was a lot, but those are, really probably the top 5 things that really, I don't know if that was 5, but it felt like 5, that people will ask me when they call into my office, like, what are the top things I need to keep in mind when I'm going through a divorce and negotiating my agreement? I'm just trying to think of other things that that clients ask me while they're going through a divorce. But I would say that really just being very mindful of that tax return that you're filing and you're signing is a legal document. And if you're filing together with your spouse, anything that's on there that might be, maybe your spouse is self-employed, and maybe they're doing some shady deductions, that your name is on that tax return. Yep. So you want to be 100% sure that, that tax return is clean, or maybe you just choose to file separately, or you choose to file head of household if you have children.
Yeah, I that's all such great advice. And I really appreciate that. Again, so many people aren't even aware of these kinds of things. They might have an accountant. When I was married, we had an accountant for many, many years. And so when we split, it was great, because there was a smooth transition. I'm still with the same person, who's wonderful. But I can see how it can be very tricky from a legal standpoint. Like you said, if you file jointly for that end of the marriage, and there is some kind of a complication, or, there's an audit, and that's going to kind of propel you into that whole possible
maybe
mess.
you've settled your divorce and you're 3 or 4 years down the line, and all of a sudden you get pulled sucked back in that situation where you're arguing over something that happened, because typically you don't get the notice the next year. Usually you get the notice 2, 3, 4 years down the line. And then all of a sudden you have to hire an attorney if you're not talking, or maybe you were talking and things are starting to, mend. And all of a sudden you're like back in the thick of it. Yeah. So that's, my piece of advice to clients typically is if you don't mind paying a little bit more, it might be worth filing separately.
Yeah. And that's great. That's great advice. So again, everybody has different circumstances, but this is something that you very much can't control, like I said, by speaking with someone like yourself beforehand and kind of working in with the attorneys or whoever's drafting.
If you are using the same advisor, absolutely, like I said at the very beginning, make sure they sign some sort of conflict of interest, because your situation is unique from your spouse's, because you are separating, but you've been together for all these years. So you want to make sure that whoever is representing you, if it's the same person, that each party knows that this individual who's representing you will do so in an equitable manner.
Okay. And what is the time frame on the maximum, or what is the maximum length of time in which one can be audited? I don't even know that.
If there's fraud, forever. Okay. So, and I brought it up because I've seen a lot of couples where they're like, I think my husband's doing some shady stuff. Oh, wow. Or, my wife, I don't know what she's doing in her business. Like, I have no idea what's happening. So, that's the situation that the statute never closes for tax fraud. Yeah.
Okay. So this is something, everyone, that you really should look into. I know sometimes again, like it's one of those things where there's so much going on and you just feel like, oh my goodness, I can't.
I just want it over. Let's just file.
But this is, the fact that you can get called back in to have to deal with something like this years down the road and you're probably healed and moving forward is just, unless you're friends with your ex. Which could be really difficult.
Backfire. The whole thing your friends all of a sudden you're working it out and then back into it. It basically rips the wound back open. And so oftentimes the way that I'll counsel clients, women especially, is, okay, so it's going to cost you, what is the price you're willing to pay right now? So you're paying an extra $1,000 for your taxes this year, to not later have to reopen the can of worms. Say, I have to hire an attorney. It's going to cost me, a lot more. So much more to hire the attorney, and then the emotional toil it's going to take on you. And
and the time is just the time.
The time. So your side of the street is clean. Make sure that, okay, you know what? I'm going to file my own return. I don't care. It's going to cost me $500 extra. And, your tax advisor can run the return. If you're working with somebody who's going to they can run the return joint and separate. That is a possibility to run it both ways. Really? Yes. And so the other thing that's really key to know about that is you can file, let's see here, let me get this right. You can file separately and then you can go to joint, but you can't file joint and then go to separate. Okay. There's one way that just let me make sure, because I don't do a lot of them where they file one way and then they change. But it's really important to make sure that once I file one way, there's no way to actually go back and change that. Okay. So that's all really great advice and really important. And like I said, if you're just feeling that overwhelm that many of us feel when we're going through divorce, you just, again, have to focus on making this as easy as you can in the future for yourself. So it's such a great resource to have someone like Rachel to go and speak to, and with your own set of facts, so you can need an advocate. You need somebody who will walk with you through it, will explain, if you go this way, this could happen. And if you make this decision, this could happen, because there's so much advice out on the internet, but everybody's situation is so unique that you need somebody that will actually ask the right questions for your situation and then explain what your options are.
Yeah, and I'm sure you work in cahoots with attorneys as well when they're drafting up all of that.
Oh yes, absolutely.
Okay, great. Let's talk about what can be done after divorce is finalized and to assure that you are able to financially support yourself and be aware of tax consequences moving forward?
Okay. So after the divorce is final, so there's a lot of things that you really need to be thinking about financially, tax-wise. And one of these probably, it's kind of on the border while maybe the divorce isn't quite final yet.
Yeah.
But things that you should definitely think about. So oftentimes what people don't think about is updating their withholding and changing their filing status on their W-4, on their DE-4 at work, if you're in California, to make sure that your withholding is going to cover your new taxable income. Because let's say you've been filing jointly, maybe your spouse had enough withholding to help cover your income. Maybe you're self-employed. Maybe they had extra withholding to help cover that. So that's something to think about. Do I need to revise my estimated payments? Because the IRS and the state have what they call safe harbors for withholding. It is a pay-as-you-go system. So you have to make sure that throughout the year, you're having enough tax withheld from paychecks, or if you're self-employed, that you're paying in enough quarterly to cover whatever your tax liability is. So that's something, maybe you've separated, you're going to be filing as head of household, you already know that you're going to be filing separately. You want to make sure that that is accounted for, and that you go into HR or you log into your portal and you change from married filing status to single, because then they'll withhold more. So you don't want that ugly surprise when you go in to file taxes in April. So definitely withholding and updating your payments is probably one of the top things that people don't really think about. They just, there's so many other moving pieces. That's really one of those things that's easy to overlook.
Right.
Another thing that's really important, and this is also kind of like the gray area between being separated and actually finally being divorced, is making sure your assets are titled properly and that your name's really on the title of the assets. And I know that you can speak to this, Rachel, as well. But that's truly important. And as you're separating, making sure that who's claiming the property taxes, who's claiming the mortgage interest, because that's a big deduction when you are home here, and you want to make sure that that's clear, that okay, this is going to be mine, and my name is on the title.
But I have something further, one step further to add to that. And that is, so when I was in the process of divorcing, I purchased a home. We sold the family home and I purchased my own home. But because I wasn't technically divorced yet, I had to take it in my name as a married. What is it? Separate? Wait.
Yes.
Yeah.
Married woman,
my
separate
name,
property.
Married woman as her separate property. And of course, he had to, sign off on that. And it's very common. I see it a lot, and people I help. And but the interesting thing is, and I made a mental note to myself that, when the divorce is final, I have to go back in there and you have to go to the, title people and switch the title. It's just my name as a separate, and I didn't do it. And then I got a notice saying from, I don't know if it's from the FTB or who it was from, but it said, you have to, are you still married, or you have to show proof that you're not? And I said, oh, darn, I never did that. So I showed my divorce decree, but then I went out right away and I called my title rep and I said, hey, we got to change this. But
that's my property.
Things like that. It's really important because it's your property and you're getting the mortgage interest deduction. You're, writing off whatever you're writing off. Plus I have my office in my house. So you have to make sure that you keep those things in mind. And that's why you are a great person to have on a team.
Yes, I think about those things.
Yeah. What about just updating stuff too? That is an example of updating. What else? What other things do we update?
Make sure you're
life
updating your life insurance. 401k. Make sure you're changing your beneficiaries on their accounts. If you've got IRAs, if you've got 401ks, a lot of people ask, well, can I name a minor child as a beneficiary on my 401k, on my IRA? And yes, you may. It gets a little tricky though, because again, God forbid, if you die before the minor child is, age of majority, you have to set. Well, a special trust has to be set up for the minor child. So it just is a little tricky. So you may want to consider maybe naming a relative, a sister, a brother, a parent, that they can then, make sure that they're shepherding those assets for your inner child.
That's so smart. And again, as an aside, I mean, I think, when I was married, we had an estate plan, we had a will, we had wills and a trust, and, all the medical, we had everything, the whole packet. And then when we divorced, I was going to draft my own new trust and estate plan. And the time kept getting away from me and I didn't do it. So finally I just said, oh my gosh. So I hired someone to do it, but it's so important to get that done. I mean,
absolutely.
And it's really an easy thing if you do hand it off to someone who can take care of it for you and you just give them the information they need. But it's especially if you have minor children, just that peace of mind, knowing that if God forbid something happened to you, this is what's going to happen.
Yeah.
So
and just having it, like you said, the peace of mind, I think is key.
Yeah. So important.
I think another thing that people forget to do is, or women, maybe people, is to make copies of all documents. Make sure you have copies of your tax returns, digital copies, that you've got copies of bank statements.
How far back do you want to keep that stuff?
7 years.
Okay.
I mean, because trying to get copies of those that are like if you have joint bank statements or if you have a joint tax return, trying to request that after you're divorced.
Yeah.
You definitely
especially if those accounts have been closed. What a nightmare.
So, and if you're self-employed, make sure you're keeping those at least 7 years. But making sure they have copies of all your financial documents in a safe place, by your fire safe. Put it, save them on flash drives or, whatever technology is the latest and greatest. Stick it in the fire safe. And another thing that I've really advised clients that are going through a divorce is get a PO box and make sure that the IRS has your PO box as your legal address. Same thing with the state, because again, God forbid that letter goes to your old address and your spouse tucks it away, and then all of a sudden you're in trouble with the IRS or the state or whatever other agency, so that you're changing your address so that where your mail is going. And maybe you're moving several times. Maybe you're selling the house, like you said, you sold the family home and bought a new one. But having a PO box for that transition period, I find it gives you the peace of mind, knowing all my government documents are going to go to one place. All of my bank statements are going to go. They're not going to be intercepted by my spouse, especially if it's a messy divorce. You want to make sure that all of your mail is going where it actually should be going. I think this is really key, so that you truly can get some good sleep. Hopefully, I didn't get a lot of sleep back then. Other things, run a credit report. I have seen where spouses have taken out credit cards in the other spouse's name.
Oh, wow.
Run up credit card debt, then not paid it. So just make sure that your debt is your debt if you have it. I've seen it. It can get very ugly. So make sure about that. And then, make sure that you have a budget for your future, that you're truly for your new future, because it's so hard to go through divorce, but then when you get through and you're at the other side. And I love your book, Rachel, where you talk about bliss, because it's truly, you get through the muck and the just all of the hard stuff, and then you can just grow and just like this guys here, it's a new day, and you can have a new future, a new life.
And you're the creator. And so you want to, I love the idea of just kind of what we've been discussing, getting your house in order, so to speak, so that you are not surprised down the road and you don't have to deal with unpleasantries and things that could create issues down the road. And when you get to that point where you've created that beautiful new life, and you and I have both been through it, it's such a wonderful place. You don't want to be pulled back into something like that. Yeah. So I love, again, the control here. You can control this. It is, and those of you who are listening or watching, please do take control in this aspect of your divorce, of your new life, of building your new life, because you can. And what more incentive do you need than that? You can, and you're doing yourself a favor.
Yeah. And remember, you were a smart, beautiful woman, and And you've got control of your future. Make those decisions for yourself, for your children, and just know that what's in the past, leave it in the past, and move forward, make some good decisions for a really strong, powerful, beautiful future.
100%. I agree with you. Yes. Wow. This has been some great information. And thank you so much for sharing. I know we can probably keep talking for hours because there's so many things. And I highly encourage listeners and viewers to contact Rachel with any questions you may have. I'm going to ask you to please share your contact information in a moment. But again, do you help people outside of California? Probably you do. Okay, fantastic. So contact her with your questions. She might have some great, classes you can attend online or wherever and learn more information. How can people reach you?
So people can contact me at my office. It's 760-730-1817.
Okay.
And I'd love to hear from you. I have been through this myself, and I know how hard it can be. And I just want to encourage you that on the other side, you have a beautiful future.
Thank you. And do you have an email that people can reach out to? I know you said your website is being revamped right now, so we're not going to share that because it's kind of in the process. But what's an email in case someone doesn't want to make a phone call?
Correct. Yeah, I understand. So my email is Rachel, just like the other beautiful Rachel Ruby, Rachel, and it's at
She spells it right.
.com. Yes, I do.
Okay, so Rachel at elmtax.com.
Yes.
Yep. Perfect. Thank you so much for being here. This has been just a plethora of wonderful information. And I hope that it can help. If it helps one person get something done easier, then you and I will both be happy. So thank you for joining me today.
And thank you so much for having me.